Hey traders, it's John Fortune here of this week's weekly Forex forecast for the 1st of June to the 5th of June 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we came down and took out the target that we highlighted at the 98.14, which was right here. And we stopped at this key area of support and we started to bounce to the upside as some profit taking came in at the end of last week. Very simply put, going into this week, we are overall slightly bearish on the US dollar. However, we have now approached a very significant support area at the 97.94. And the whole time we are still above the 97.94, we are actually going to be neutral on the US dollar index because we could bounce from this area next week. So what we'd like to see if we are going to turn fully bearish on the US dollar index is if we can break below the 97.94. This would give us a chance to look for further declines down towards the next key of support to the downside and the target set at the 96.69. But because we start the week above the 97.94 and because of that risk of going back into this longer term correction, which we've been discussing in previous videos, we are actually going to go into next week without a strong bias in the dollar one way or the other, which just simply means we're going to be trading the charts on their own merit without actually having a very strong opinion on the US dollar itself one way or the other. So next market we're going to look at is crude oil. Now last week we were looking for further advances to the upside in this market and we did take out the target set at the 28.93 before moving higher towards the second key of resistance to the upside at 32.84. Very simply put, going into this week we are still looking for further advances to the upside in this market, so we do favour long positions in crude oil going into next week. Any pullback in this area, and preferably as always if we can come back and retest broken resistance from the past, looking to turn support at the 27.26. This would be a great opportunity next week to start to look for bullish setups. And if we get the right kind of bullish setups in this market, we're going to be looking at initiating longs up towards the next key of resistance to the upside in the second target set from last week at 32.84. And if we can get a breakthrough here, and you can see we've stretched out this chart quite a bit because once we get above the 32.84, there is pretty much nothing but air between the 32.84 and the 40.93, and that's because of the massive sell-off we had recently. But if we can break above the 32.84, we're going to be looking for further advances up towards the next key of resistance, the upside and the target set at the 40.93. So the next market we're going to look at is euro dollar. Now last week we were looking for further advances to the upside in euro dollar and we did take out the target set to the upside at the 1.1052 and we came within a few pips of achieving our second target to the upside at the 1.1148 from last week. Very simply put, as we have not achieved this just yet, what we'd be looking for going into this week is any pullback in this area in euro dollar is going to be viewed as an opportunity to look for bullish setups. And if we get a nice pullback, because in this case we'd have no risk to reward in this kind of area here, but any pullback in this area, we're going to be looking for bullish setups, and we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set from last week, target 2, at the 1.1148. And if we can get a breakthrough here, we're going to be looking up towards the next key of resistance, the upside and target 2, at the 1.1256. So the next market we're going to look at is pound dollar. Now last week we highlighted the 1.23480, which is this level right here, as an area to start to look for a pullback and a potential reversal to the downside. We did get a nice pullback into this area and we finished the week actually holding this area, failing to break through to the upside. In the process of pulling back, however, we did actually have a near-term reversal to the upside in the pound dollar. So it leaves us in this situation of a near-term reversal to the upside, but we've really failed to break resistance to the 1.23480. So very simply put, going into next week, what we would like to see is we're going to treat this one of those rare occasions where we're actually going to be waiting for a breakout in either direction before we take a position on this. If we can get a break above the 1.23480, this is going to be a great place to start to look for bullish setups. So we'll be looking for a break to the upside, and if we can pull back and retest broken resistance, turning support, this would be the area we'll start to look for bullish setups. And if we get those setups, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.2642, and that would be our favored direction. However, if we do get another reversal to the downside and we break the 1.21790, a break of support, any pullback in this area, so broken support, turning resistance, is going to give us the opportunity to start to look for bearish setups. And in this scenario, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set, the 1.1974. So going into next week, pound dollar is actually less clear than it usually is, and as a result, a little bit of patience is required, I think, from our side on this, and we're just going to wait to see which direction it breaks before forming a bias and looking to take positions. So the next market we're going to look at is US dollar yen. Now last week we highlighted the 106.40 as an area to start to look for a pullback towards, as we're coming quite close to the target at the 108.20. The US dollar yen didn't actually do much. It did pull back towards here before rallying to the upside, but it's starting to form a bit of an expanded pattern. It isn't quite, technically speaking, an expanded pattern, but it's forming that kind of choppy correction. So going into next week, this isn't really a very good place to get involved. What we would like to see is, for anybody not involved from last week with your stops out the way, is if we can pull back further, because the further we come back, the better risk reward setups we get. Any pullback in this area is going to be viewed once again as an opportunity to start to look for bullish reversals. And if we get the right kind of setups in this market, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, at the 108.20. Now going into this week, we may get a continued correction in this pair, because what this is telling us is the US dollar and the yen are actually very evenly matched in terms of strength. When you get two strong currencies, or two weak currencies in this case from last week, they just tend to move sideways. So we would like to see a deeper pullback in this before we start to look for bullish setups, because of the risks surrounding these kind of choppy megaphone patterns. So the next market we're going to look at is Aussie dollar. Now last week we started the week in this area and we were looking for a rally towards the key area of resistance at 0.6650, which was the target highlighted from last week. You can see that was right here. So we did have a really nice rally into this target and we held this key area of resistance from last week. We're actually starting to form, suggesting we're going to break higher, what's known as an ascending triangle, on that key area of resistance we had from here last week. So very simply put, going into this week, what we're going to be looking for is any pullback in this area is going to be viewed as an opportunity to start to look for bullish setups once again. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, the 0.6814. So the next market we're going to look at is New Zealand dollar. Now last week we were looking further advances to the upside. We started the week here and we had a really nice rally to the upside in this market, taking out the target set at the 0.6194. And we came very close, within a few pips of the second target at the 0.6251. We haven't achieved it just yet. So very simply put, going into this week, we are still looking for further advances to the upside as the favourable bias in this market. Any pullback towards the key area of broken resistance from the past, looking to turn support at 0.6150. This is going to be viewed as an opportunity next week to start to look for bullish setups. And if we get the right kind of bullish setups in this market, if we pull back and we get that good risk to reward to the upside and we start to see a bullish reversal breakout to the upside, we're going to be looking at initiating longs up towards the next key of resistance to the upside and target 2 from last week, the 0.6251. And if we can get a break through there, we're going to be looking up towards the next key of resistance to the upside and target 2, the 0.6333. So the next market we're going to look at is US dollar Swiss franc. Now last week we highlighted the 0.97030, which is this level right here, to look for a sell-off to the downside. We did come back and test this area before selling off to the downside, so we had a really nice move in this last week and we came very close to achieving the target outlined last week at 0.9589. So very simply put, for anybody not already involved from up in this area last week, any pullback in this area is going to give us another opportunity to start to look for bearish setups. And once again, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set from last week at the 0.9589. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 0.9503. So the next market we're going to look at is US dollar CAD. Now we had a really nice sell-off to the downside, which we were looking for last week, and over the last 2 weeks we've actually been tracking a move from a key area of resistance highlighted at 1.40760 a couple of weeks ago, which was right here, down towards the key area of support to the downside at the 1.3850, which was right here. And you can see it took a couple of weeks. It actually took 2 turns to get down here, but we did have a nice sell-off from this area, and we did finally achieve the target set out last week at the 1.3850. So very simply put, this market is still trending to the downside, and with the US dollar index above that key area of support, and without any strong bias in the dollar one way or the other, we are going to favor short positions once again in US dollar CAD going into next week. So very simply put, going into this week, any pullback in this area is going to be viewed once again as an opportunity to look for bearish setups. And if we can pull back and retest broken support from the past, looking to turn resistance to the 1.39640, this is always preferable. Any pullback in this area, however, is going to be viewed as an opportunity once again to start to look for bearish setups, and we're going to be looking at initiating shorts down towards the next key area of support to the downside of the target set with the 1.3466. And last but not least, we have gold. Now, gold is still in an overall uptrend, and we do favor bullish positions in gold. Last week, we highlighted the 170830 as an area to look for a pullback to. We're viewing this at the moment just as a large bull flag, and you can see we did come back, and we did in fact bounce from the 1708.30 highlighted last week. So very simply put, going into this week now, any further pullback in this area is once again going to be viewed as an opportunity to start to look for bullish setups. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside of the target set at the 1797.40. And you can see, because this is quite a distance, if you want a conservative target, you can look first of all to the highs over here around the 17650 before we get there. However, overall, we would still be favoring moves up to the 1797.40. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to all of you who have subscribed to the channel so far. I want to wish you all a fantastic weekend, and as always, I want to wish you a great trading week next week. The only thing left to say is take care, and don't forget to trade safely.